What's up, you guys? It's Matt here. So let's take some time to talk about AMC. I need to discuss exactly what's going on right now, the all-time lows that it's actually getting at, and what this really means for AMC, in my opinion, right? I'm not saying that you guys should follow my lead in any way. Obviously, this is not financial advice. It's on the NFA channel. Even if I am talking about it on any other channel, it's still not financial advice. I'm not going to tell anybody to buy anything. I'm not going to tell you to sell anything. I'm not going to tell you to put all of your life savings into one play or any plays or diversify or anything like that. Like, I'm not telling you what to do with your money. The decision should be solely on you what to purchase. And if it ends up being this, then it ends up being this. But if it ends up not being this, then it's not this. But it has to be based on your reasons, right? So I wanted to talk about AMC in this video because of a lot of the information that's going out, right? A lot of the things that are happening, the news, the positive, the negative news. And we will talk about that in this video, mainly focusing on, the all-time lows that it's actually getting to. So guys, hit the like button, hit the subscribe button, hit that notification bell for more videos like this one. Also, make sure you check out some of the links down below. It might help out the channel. And if you want to follow me on Twitter, follow me on Patreon, those links are also down below. Or you can just type in @Perry8K on Twitter. You'll find it and it'll come up. So feel free to follow me over there. But a lot of people were surprised. Right? I definitely ran into some people that were like, yo, do you see the price of AMC? And I was like, no, I really didn't, right? Because I didn't fully pay attention to all of that and exactly where it was. I understood what was happening, seeing a reverse split. And seeing that reverse split, you could see the price and how it does rise. So other people didn't understand that. They were like, hey, we see it at $14. This is crazy that it's up this high. Or it's up to $12. It's crazy that it's up this high, right? $20 is crazy that it's up this high. But I had to shut it down really quick that it's a reverse split, right? So you have less shares. Even though you're seeing that price, you do not have a higher balance. You have a lesser balance. And most likely you saw things that have decreased before this was happening because they understand that a reverse split is mainly negative. It's not really a positive thing to look at for investors. For the business, it may be more positive, but for investors, it's not really the most positive thing in the world because we always see a drop. It's not 100%, but it's pretty much up there. It's at like 80 or 90% of the time, you're going to see it decrease a heavy amount. Now, AMC was at a level of $12, or sorry, was at a level of $14 the last time I saw it with the previous close. But throughout the day, it did end up decreasing. So I do want to open this up and show you really quick. So currently, as you see, it closed, it's at a level of $12.56 in the after hours market, up 1% over the close of $12.43. But seeing it down 13.5% over the day, or $1.94 after seeing a reverse split, I understood that that was going to happen. Now, we did see 24 million shares worth of volume, which is way higher than the average, while you're also including the reverse split of 4.8 million. So you're looking at 24 million versus the 4.8. You understand that it is a significant amount, a significant increase that's there for this position. Now, what was the reverse split? I did explain this in my other video. The reverse split was a 10-to-1. So basically, if you had 1,300 shares like I did, now I currently have 130 instead of having 1,300. So it definitely sucks seeing that because I could have, held on to the money that I did have and I could have sold at that moment. But I feel like overall, as an investor, it always makes sense to protect yourself. You could do whatever you want. But for me, it was more or less not giving up on the actual company and being a part of that. And yes, I could have got right back in it and had pretty much the same amount of shares as it does come down to a level of $10 again. But now my cost basis is around $215 versus being at $21, $21.50. So that does suck a lot. But I still do understand what this overall picture is. Now, if more dilution comes, that's a different story. But right now, it still shows the same picture. It's just a higher price point that people will see it easily get to with the lesser shares that are out there. Now, if dilution happens, again, that could be something that does jar this whole entire thing. So the thing that makes me that I wanted to look at, right? I wanted to see that the company is starting to thrive, the company is starting to do well, and seeing the net income actually being more of a positive, not crazy positive, but looking at about 9 million, 8.6 million, after taxes. That looks really, really good, right? That's only in the second quarter, and you are seeing that positive turnout versus the negative turnout that you have seen in previous quarters. So that means a lot to me. And also, I like to see exactly where the market cap would be with the squeeze actually happening, right? Maybe the bare minimum of squeezes or middle of the road squeezes. But currently, the free float market cap is about $2 billion, $1.9 billion. And you're probably like, well, what's the likelihood that it does find a way to increase up to that level? Well, currently, right, I just want to bring up Excel really quick. Let me bring up Excel and put Excel over here. I'm going to go ahead and go through the math, and we're going to look at 12.43, right? 12.43. We're going to try and do this quick math while we're here at about $2 billion. 0, 0, 0, 0, 0, 0, 0, 0, 0, right? That's about $2 billion that's there. So the total amount that you do have there for... Let me open that up. So $12.43. Let me Control Z. $12.43 equals what $2 billion would be. Now, let's go into what else I had. So if we go and bring this up and we look at the market capitalization, this is what I'm very interested in, right? Because if we see the squeeze that's happening, we know of what the cap is going to be at with. That's not even saying that this is the max level that it could get to, because the short interest is a lot higher than it was at previous times. And if we can see the survival of the business and the kind of the back off of hedge funds and shorters into the position, then we could see this push up to about a $30 billion market cap. So let's say it does get to a $28 billion market cap. So if I'm going over to Excel, and instead of looking at a $2 billion market cap, you're now looking at a $28 billion market cap. We're literally taking this divided by this, and we're getting whatever that number is. So it would be 160 million. Now, if I have the 160 million, right, I had to pause it because I had to go through all the math. I was looking for the amount of shares. So it's about 160 million, 150 something million shares. We're taking that and we're dividing the $28 billion dollar market cap into the 160 million, right? So the 160 million into the 28 billion, that's what I meant to say. And we get $174.02. Now my overall cost basis is a lot higher than that. It's 215 million. So if I needed it to get to 215 million, it would be at a much higher market cap with 160, and I'm taking this multiplied by this, and let me make sure that I'm showing what I need to show. And let's see, tab. Sometimes Excel just doesn't want to work with me. Let me close this, close it. All right, Excel just doesn't want to work with me today. I don't care. I don't care about this. All right, so 160 million, we would need to see a $34.5 billion market cap. That's what I would need to see in order to get to $215. And now with dilution, it makes it even more difficult to get to some of those places. And that gets me only to break even. And right, it was break even from, a while ago, not from my overall amount that I had in there. But break even from when I had this investment and when I kind of reinvested into it and put a little bit more to average down, I had 1,300 shares. So either way, I was able to profit off of the deal. I just put a little bit more into it at lower prices as it did come back to some of these lower levels. So now it's definitely more of a tricky situation, and it doesn't provide as much of a benefit as a lot of people think. Now, with only 160 million shares, it does provide a lot higher of a price that it could get to, that it could squeeze to, right? 215 may sound like a lot. $34 billion market cap may sound like a lot. The history of where AMC has been, it has never been, above that $28 billion mark, but could be worth a hell of a lot more with a ton of things that they could be introducing, especially with, the push for retail traders, or the push for, the retail market to hold AMC overall, to control AMC. And we do, right? This is one of the few that we do control. And that's why there's a massive fight against it from big money, from smart money, from hedge funds, from institutions. That's just how it is. So anyways, I still believe in what AMC can be. It's just now with the dilution, it makes it a lot more difficult to get to the levels that we wanted to. And honestly, if we didn't have this at all, if we didn't have this potential chance at all to even I guess do their reverse split and maybe even potentially dilute it, you might not see AMC survive what's going on, right? They started to profit, you see some profit, but it just gives us less in the end. And that sucks. It does, but it doesn't mean it's nothing. That's what's crazy, is people automatically assume that it's absolutely nothing and they cut their losses. But in reality, it still will be something. It just won't be as much as people think. Like holding 1,000 shares of AMC and it getting to $1,000 per share, or $10,000 per share, or $100,000 per share. It's going to be probably a lot less than that. So we will see how all this plays out, and how things roll, how we get back to a form of normalcy, at least for us as investors. But that's what I wanted to bring to the table. I mean, right now we're sitting at pretty low lows at about a $1.8 billion market cap, and it may be a potential chance that we come down to even lower as we see potential dilution happening again, right? So anyways, we'll talk about that in future videos. Guys, hit the like button, hit the subscribe button. I'm going to get out of here, and I'll catch you guys in the next video.